Hi, Mr. Bandyopadhyay. Thank you for being on the show.
Thanks, Bhaskar.
This week's Bankers Trust column has given us a sense of the need for banks to dexterously manage the liability side. It's true, of course, that the days of huge amounts of surplus liquidity are now over. Let's delve a little deeper into this. You have spoken about the need for banks to raise deposit rates, and we're seeing that at present that most banks have very healthy interest margins. But going ahead, would that change as fund mobilization becomes more competitive?
Actually, banking is more about how you manage liability than deposits. Aditya Puri is one person who continuously said that. And I have heard Mr. Uday Kotak also saying this. So your approach could be like I pay high to the higher interest rate, relative higher interest rate to the depositors. And then I also charge higher interest to the creditors. But in the process, what happened? A bank ends up compromising the quality of assets. So the trick is how you keep your cost low, and at the same time don't raise your interest rate for the creditors too high. Uh, so don't compromise the quality of credit, and at the same time you keep a healthy NIM, that the so-called net interest margin. That so banks have the advantage now. They don't have to, like, credit cost goes instantly for a borrower. Every month they are changing, but deposit cost for the bank goes with a lag effect, and for you and me, the depositors also. So it's a fine balancing act, and the banks will be facing this. Have already started facing this. How to keep the margin intact?
You made a very pertinent point in your article that is, if banks were to bring down their excess SLR holdings, then the government's cost of borrowing would go up. And we've been seeing, record high government borrowing programs over the past year or so. So, how can banks deftly oil the liability machine, as you have put it?
You go to the market and raise CPs and CDs, which many of the banks are doing. You go for bulk deposits, which are being auctioned by uh, healthy corporates, um, you know, and you raise your retail deposit rates, term deposits, etc. So it's again, let me repeat, it's a fine balancing act, and this is the kind of situation where actually the men get separated from boys.
That brings me to one of the most interesting points in your article. You wrote about banks' obsession for growing balance sheets at the cost of their profit margins. And you just mentioned this point about some bulk deposits being auctioned by healthy corporates. Now we'll see that rates are going to go up further from here, and we will see that liquidity is going to dry up even further. So, how would this affect bank profitability?
So this obsession for balance sheet is typical of public sector banks, not private banks. I may sound very uncharitable, but that's a fact. And post AQR, asset quality review, and the big bang expose of their bad assets, it actually was tamed. So the banks learned their lessons, and that's why the credit growth was pretty slow. If you see till last year, it was very slow credit growth, and of course, the external factors like COVID also impacted. But banks were very circumspect. Banks were using their discretion. Uh, but now we are seeing that credit growth is a decade high. So we are seeing that, particularly, I would not name the banks, but some of the banks are giving money, uh, particularly to state undertakings, etc., which they don't deserve the money.
We've seen that a recent report by State Bank of India has pointed out that about 55% of rate hikes are passed on to deposits. And it was referring to the existing so mix of banks in terms of their CASA. So, what would be your view on this?
For instance, State Bank of India is probably offering deposit rates, if I'm not mistaken, 2.75% on savings bank. Now, it has recently raised the term deposit rates by as much as 80 basis points. Now, would it continue to offer 2.75 or 85, whatever it is? I would like to believe no, it needs to go up. And many of the banks are offering less than 3.5%, around 3% savings bank rate. So I'm not getting into the issue of you are depriving the savings community, etc. But this is untenable. It has to go up.
We're seeing that for the first time since its formation in 2016, the MPC has failed to deliver on the inflation mandate. So, what can we expect from the additional meeting of the MPC? And should the statement to the government be in the public domain?
Under the Act, if the Reserve Bank of India fails to contain inflation with the flexible inflation targeting, that is 4 percentage point with a band of 2% on either side, which means 6% on the higher level, for 3 successive quarters, that's 9 months, it needs to inform the government sort of explanation why it has failed, right? And this has happened. As we speak, 9 months have passed. And then when the current number will come for the last month also, you will see it is gone. There's a timing of the thing is very interesting. Of the meeting is 3rd November, just the day after the FOMC meeting ends. So I would like to believe, I mean, I'm no insider, but that will give the Reserve Bank of India also handle to take it forward, a sort of outlook on the interest rates and of course outlook on inflation. And second part is this, whether should it be public? Yes, of course it should be public. But RBI governor, the last press conference, post-policy press conference, had said, no, it's a confidential interaction between the RBI and government, and probably it's up to the government to make it public or not.
That's it from our side. Thank you very much for coming on to the Banking Show, Mr. Bandyopadhyay. It's always a pleasure speaking to you.
Thanks, Bhaskar.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.